the first thing I want to say about taxes today and tomorrow's video will be about poker player taxes, is that months ago I got something wrong. In an early video, I spoke about how much of your income as a poker player you would hold on to after filing as self-employed, you know, as a gambler, and paying your taxes. I was just thinking of my 2021 taxes. Now, between summer 2020 and spring 2021, the stock market was going crazy, and I basically ditched my dividend plan at the time and was swing trading for those like 7-8 months, which worked out well, but it meant for me that 2021 had a lot of stock market profits, which isn't normal. So the tax bill I had in 2021 was a lot higher as a percent than it normally is. So the percent for me, which my situation is a little odd, is about 70%. I hold on to about 70% of what I make. My permanent address is New York, even though I'm in Vegas most of the year. So I have to pay state taxes for New York, and then I also, of course, have to pay federal taxes. If you lived in Vegas, it would be different. You would never pay state taxes, just living in Nevada. You would still have to pay federal, but you would hold on to more than 70%. I have to pay New York taxes, which works out for me. It might seem odd, but I never pay 2 rents. During the holidays, I don't pay rent at all. I'm at my parents' house, and not having a permanent place in Vegas means when I go to Palm Springs, when I go to Council Bluffs, when I go to South Dakota, I'm only ever paying 1 rent, the place I'm in. I never need to pay my Vegas rent, and in addition to that, my rent on the road. I've done that before when I was in law school. It's terrible. So I could get a permanent place in Vegas. Some people tell me to do that, but that would mean paying like an extra $15,000 in order to get a tax break and not pay state taxes, which is exactly the opposite of what you're trying to do. It would be a move to save money, and I would have to pay $15,000 to do it in Las Vegas rent and an apartment and all the utilities that come along with it. So it just doesn't make any sense. It's an odd situation, but I like the way I'm doing it. So I hold on to about 70% of what I make living in New York, filing as self-employed, filing as a professional gambler, and paying federal taxes, but only state taxes at the New York level. But mostly today I wanted to talk about deductions. So I actually don't take a ton of deductions. Even though I'm on the road most of the year, I'm not really on the road as the IRS season. So if you go somewhere for more than about 7 weeks, it's not very, you know, exact. It's about 7 weeks. Even though you're technically not where your permanent address is, you're there for so long that the IRS treats it as, you know, your permanent place. So you don't get to take, you know, on the road deductions. But say I went to a different place every 4 weeks, every month I was in another state playing poker, there would be a ton of deductions. Now I would need to file state taxes, like a lot of state returns, because I'd be in a different state all the time, but there would be a lot of deductions. The big 3 are miles, lodging, and meals. So after you've been in a place for 7 weeks, which my trips to Vegas are more than 7 weeks, I'm really not eligible for these things. But if you wanted to know about them, meals is 50%. While you're on a work trip, 50% of your meals, keep the receipts, 50% of that. 100% of your lodging can be a deduction, and your miles. It's 57.5 cents per mile, 58.5 cents per mile, something very close to that. And you get to deduct all of that. I'm in Vegas for such long stretches that I'm not really eligible for that, and my taxes probably aren't as interesting as you might think. It's really just, I made this much playing poker. I do have a few other small forms of income that gets included, but there's not really many deductions I take because I'm in one spot for so long. And if you were gonna do any of that for everything, just keep all your receipts. It would be best to, you know, take a picture of it, scan it, somehow get it to a PDF file, which is going to be difficult to get corrupted, and just have all these PDF files of all your receipts. You're going to do the math on your own. You're going to add up, all right, this is what my meals cost, half of that is this number, and I'm deducting that. And the receipts, the PDF files that you should save, is just a way to prove it in case there's ever an issue later. But the IRS isn't gonna, you know, first ask for like pictures of all your receipts while you're doing your taxes. You're just gonna input the numbers, and in case there's ever a problem, you want to have proof to back up everything you've said.
Yeah, I got it at the stadium. And then,